Our penultimate panel for the day will kick off a two-panel stretch, the timely topics of technology and innovation. Our next one is Innovation, Disrupting Insurance and Breaking Traditional Molds. It'll be moderated by our NAIC President and Director of the Idaho Insurance Department, Dean Al Cameron. And our panelists will be Petra Hielkema, Chair of the European Insurance and Occupational Pensions Authority, or otherwise known as EIOPA, and a colleague of mine at the IIS. Tim Bixby, the CFO of Lemonade, and Lucy Pilko, the Managing Director and Senior Partner of the Boston Consulting Group. So with that, Dean.
Thank you, Gary. It's good to be here, and I'm excited to have these three panelists with us today as we talk about this dynamic discussion of innovation and working through existing barriers as we look towards modernization. It's clear that the pandemic's kind of pushed us or accelerated us in some ways on innovative forums and conducting business in the insurance sector. And we're wanting to talk about those that are going to stick around and those that will be the long-term changes and those that will adjust even further. Tim and Petra and Lucy will provide an understanding of the nuances of technology and mapping out how insurance products are formulated and offered in today's interconnected world. So I'm really looking forward to their views and their expertise. So let's start with an opening question for all of you, and whoever wants to go first is fine with me. The question is, as insurers have increasingly ramped up their use of data and technology to spur innovation ways in doing business, what roles do insurers play in advancing innovative practices in today's marketplace?
Shall I start? Yeah. Yes, so first of all, thank you, Dean, thank you NAIC for having me. My first meeting that got cancelled due to Corona was actually an NAIC meeting, so I think it's good to pick up here today, and I'm very excited to meet so many people in person. So I think it's necessary that we see each other in person. Absolutely. So thanks a lot for that. Having said that, I also think that the Corona crisis showed that we can actually be a lot more digital than we thought. We all know where to find the unmute button, switch from WebEx to Teams back to Zoom, so I think that's a benefit. But what is digitalization for insurance? And I think first of all, it's a new world that has risks in it, and in which we do want people to move into. And I think risks can be managed by insurers. So I think in general, what you've always done is managing society's risks. I think insurers will keep doing that. Having said that, of course, they're very experienced in dealing with data. So I think whether it's the back office or the front office, I think there's many opportunities for efficiency, for new products, for better products sold by insurers. And in the same manner, I think that will benefit then societies, and it will benefit, as you so beautifully said in your opening, the peace of mind that people can have. And I think that is something that they can also bring in a digital world. And of course, that will require something from us as regulators as well. And so here's opportunities. I think with more data, we can also maybe enhance, improve, make more efficient our supervision. But at the same time, there will be challenges as well. And we need to learn. So I think it's a mix of diving into new stuff, but at the same time, I think for good reasons, and I think with good outcomes.
Oh, great. Tim?
Sure, so thanks also for having us here. I'm Tim with Lemonade. We're a youngish, newish, but growing consumer insurance company in the P&C space. And I think there's a role for the insurers, and I'll speak narrowly with our experience maybe more so than the industry, but I think there's a role not unlike that of perhaps the regulators, which is to speak on behalf of the users, the consumers. And not so much in the regulatory way of protection and stability and things which are very important, but more so in the way of experience. What's the user experience? What should a customer think and feel and believe when they're in the insurance experience? And one of the ways we think about the world, and was really the genesis for the creation of Lemonade, was to ask the question, why can't consumer experiences that are full of ease and delight and a little bit of fun that people experience every day, on Spotify or Uber or Amazon or Apple or wherever, why can't that also happen in transactions that are a little more complex, like insurance? And we said, let's try it, let's do it. We understood that it was extremely complex, but we said, let's take the complexity away from the consumer. Let's deal with the complexity using data and technology and insurance expertise, but leave the simplicity for the customer. And so I think our role as an insurer is to help spur that transition and help that transition along. We have the benefit of a little more agility and a little more ability to take risk, perhaps, than larger, more established companies. And while we don't take those risks in areas that would create trouble for the business as a whole, we can take them around the customer experience. And I think if we can do that and help the industry along, work with regulators to help spur that, that's a great use of our effort, our investment, and our time.
Great. So interesting. I want to follow up on some of those ideas here in just a minute, but let's let Lucy have a chance.
So great to be here with all of you today and with my fellow panelists. You know, I guess I would answer that question by actually weaving together two things, one that you each said. One around the societal impact and the positive impact that insurers can have, and the second around the customer experience. You know, I believe that the last few years has really illuminated for the world the level of risk that is around us all the time, whether that's risk due to the pandemic, risk due to various political situations, and then the daily risks that we encounter, and obviously climate change. What I think insurers can and should be doing is moving into a space that is not just about making the transfer of risk a better experience, and there's plenty of opportunity to make that a very positive experience, but to help your customers really think about how do they understand the risks around them, how can they prevent or mitigate those risks, and then how do they effectively and appropriately transfer that risk. And I just think there's a huge opportunity from an innovation perspective to give back to society in that way and to build on a really great foundation, but to take it to the next level over the coming years. And data and technology are going to be at the heart of getting that done.
So do you, and I'm diverting from the script here just a little bit, but do you see a role in innovation with the insurers to break down barriers or access to coverage?
I think it's both access to coverage as well as understanding the role that everyone can play. So maybe just a specific example. If you think about remote aerial imagery and the possibility that that has to help people both on the insurer side and then whether it's a business or a consumer understand what risks they have from a property perspective, what they can actually do, help them stay on top of whether they're managing that risk, brush, et cetera, in order to not only be smart about how much they transfer, but also to manage that risk. And so I think it's a really, there's a lot of ways that we can bring this technology to really help improve the entire situation, the profitability of the transfer of risk, as well as the ultimate outcomes.
Yeah. So I'll transition then to the next segment, or this next part is to discuss the role of the regulator. I'm going to start with you, Petra. Tell us about how regulators from your perspective and supervisors in Europe are able to maintain their commitments to policyholder protections and consumer protections while at the same time not stifling innovation.
Yes, for that is the challenge, of course, and I think completely in line with what EIOPA has been saying, we need a balanced approach. But what that means is that you have two sides of the same coin, which is on the one hand regulation, on the other hand supervision. And starting with regulation, I think what is important is understanding that this is already a highly regulated industry and look at what we have to deal with the risks that might be new risks, but that can perfectly be dealt with through the frameworks that we already have. But monitoring that. So I think one of the new tasks for supervisors is to really look at the regulation and see if it's fit for purpose, and if it's not, communicate how that could be dealt with, what will be necessary. And I think here the dialogue with both industry as well as with the supervisory community is key, because we're all in the same flow of dealing with digitalization. There might be other places where people already have thought about that. So I think that's one. If you then look at how you do that, I think it's same risk, same rules, same regulation. I think that's the basis of it. And maybe indeed, I always say we do tend to have this role of turning on the lights when the party is really getting nice, but I think that is part of the role. So let it flow, the innovation, but there are these moments where the risks become too big and we will have to speak up. So that's the first. On the supervisory side, I think that is indeed sometimes turning on the light, but I think more it is already in advance seeing how you could mitigate the risks, how you could consider that in your governance, and sometimes also through guidance, make sure what you would expect. And I think examples of that is some principles that we have brought out in the EU on how to deal with AI from an ethical, trustworthy perspective, but also, of course, on the cyber side and how to deal with cyber risks. And I think here the DORA Act, the Digital Operational Resilience Act, was very helpful and is very helpful. It was just adopted formally 2 days ago, but I think it will help also to deal with the risks of moving to the cloud without stopping that development. And I think that is an example of how we could actually not hinder, but still deal with risks.
Yeah. So Lucy, the growth of innovation tools for regulators is an evolving area. We're trying to figure out how to use those tools and the appropriate use of tools, and certainly the laws is also evolving. What can regulators do to give concrete direction to insurers that would not become obsolete in a short order?
I think picking up on this theme of not becoming obsolete in short order, part of it is just a recognition that the pace is moving much faster than it ever did before. And so I sort of feel like I'm less worried about, is this going to become obsolete or not, but are the regulators and the supervisors sort of moving shoulder to shoulder with the insurers? And I think building on Petra's point, this is really about an ongoing dialogue. There's always this challenge of, the desire for sandboxes, for innovation on the side, and that doesn't really fit with the spirit and the requirements of regulators to manage the needs of from a policyholder perspective. And so I think there's a couple of things. One is just sort of not trying to lead the innovation or drive the innovation, but really think of them, think of yourselves as shoulder to shoulder with the insurance companies. And I think this requires just a tremendous amount of ongoing dialogue. I think we have to sort of less worry about things that are going to last for time and more worry about, do we have the right thing at the right moment in time? I mean, the world has changed so much. Picking up on the cyber topic, the evolution of ransomware in the last couple of years has been just a huge issue that all insurers are having to face, and the regulations and the policies haven't always kept up around what are the appropriate responses from an insurance perspective. And so this is where I just think the constant dialogue is the way to manage the technology changes and the tool changes.
Yeah, so don't worry about the long-term or short-term nature. Focus on the relationship and the dialogue so that it's handled appropriately.
Yeah.
Tim, you're obviously representing a dynamic company that's growing very quickly, and in some cases, many of the companies like yours are growing faster than the legacy companies that have in place risk management frameworks. What have you done at Lemonade to counteract any issues that might arise from growing too quickly?
Yeah, I think it's interesting. I think about there's a metaphor that we think of, which is sort of the aircraft carrier and the speedboat. Right. And there are cases where it's great to have an aircraft carrier, where you know where you're headed and you know what to expect when you get there. It's an easy choice. In an environment where things are changing either more rapidly or in different or more unpredictable ways, it'd be nice to have a speedboat around sometimes. And so I think we think of less about speed and more about agility and the ability to adjust and pivot in ways that enable us to sort of navigate these challenges. We have to satisfy all the same regulations as companies that are 10, 20, or 100 times larger than we are, and we do that, and we have the infrastructure to do that. But I think on top of that, we bring our experience from the technology world. We have lots of insurance experts with decades of experience on our team but we have lots of technology experts too, and we bring those together, and what they bring in that combination is a way to say, how do we use the ransomware challenge, for example, how do we bring to bear what we know how to do in adapting to change in a day or a week or a month, where a large organization might take 6 months or a year perhaps to work through an effective process to react to things like that. And I think in some ways it gives us an advantage that counteracts some of our challenges of being younger or smaller or the speed at which we move. So I think it's less about speed of growth and more about ability to adjust quickly and responsibly.
Okay. So let's shift a little bit and talk about the context of the pandemic and how that's influenced innovation in this sector. And Lucy, how have you seen the market adapt to the pandemic and maintain connections with consumers, and especially as insurers rely on the use of technology in even greater capacities?
Yeah. I mean, I don't think it is a surprise to anyone in this room that the pandemic drastically accelerated the levels of investment in digital capabilities at insurers. It forced all of a sudden new ways of working, both internally and externally. And I think one of the things that you see is there's just been a real shift in both how much money is being spent on new ways of interacting and the new ways of working that allow that to be iterated on in fast ways. So we are seeing a tremendous amount of investment, for example, in client portals, particularly on the commercial insurance side, and really figuring out how can we create tools that are at the fingertips of both brokers and customers in order to understand the risks that they have, the policies that they have, the status of things, and to inform themselves. So that's been a big piece of it. I also think there's been sort of an interesting moment. We talked about the pandemic illuminating a level of risk in the world. And I feel like a lot of insurers have really leaned into this question of what is the purpose of insurance? How do I talk to my customers about why it matters, when it matters, what is the appropriate level of coverage? And that's been one of, for me, the exciting things to see coming out of the pandemic is sort of this increase on education and informing in new creative and innovative ways of how you connect with customers, but about the role that it can play for consumers and for companies.
I will say this, the one unexpected silver lining of the pandemic was all of the hours that we've spent over decades thinking about business continuity plans. How do we work the office when we have no office? All those hours are gone. We never have to think about it again. We
solved it.
We solved it. It's done. All those. It's gone. It was unanticipated, but a nice side benefit.
I hope we've solved it. We'll see. Yeah. We'll see for what the next round looks like. But I think you're right. Petra, in your work on sustainability, how can insurers contribute to innovative products and services to lead the industry in a post-pandemic world?
Yeah, very good question, Dean. And I think here, first of all, let me say that insurers can play a very important role. Much has been done on sustainability and other parts of the financial industry, but I think here really is an opportunity for insurance. And I think in ways to do that is first of all, when you look at natural catastrophes, which are of course when it comes to climate very relevant, I think there is a role to play through insurance, but there is also still a lot of challenges that we need to overcome, and I think we need to see how we can work together here. I think what we've seen is we've seen gaps in protection. So I think building dashboards with data, preferably open source, would be helpful to identify where gaps still are. Moreover, I think what would be helpful, and we're actually doing a pilot, is investigating even more, why do policyholders take out coverage, but also why do they not take out coverage? If you look at the flooding in Europe last year, very serious floodings, and you look at the coverage that was out there and how many took it, only 37% took coverage, but where it was there. So why was that? We're doing a behavioral study on that. But then also, if you want to underwrite it, and I think here industry indeed with features and the supervisors need to work together is when you are in an underwriting process, how can you assess the risks, what are the drivers of the risks, and what products would you need, and do we need new products, can we find them, is there regulation hindering that, and moreover, how can you make sure those products are never used, because there's mitigation, there's adaptation. And I think in this part, the liability side of insurers, there's a big role to play, whereas most of the discussion on sustainability is focusing on the asset side. But I think when it comes to underwriting behavioral change, but managing risks, I think here is absolutely an opportunity for insurers, and here also supervisors need to play their role in order to make that happen.
Yeah, great. And I know we'll get into the gaps in coverage here in a little bit, so we'll come back to that. And it's an interesting thought. It's a question in my mind as to whether us as regulators are preventing the kind of products that are needed to reach out to folks. And Tim, given your reliance on tech through the COVID-19 environment, what challenges or opportunities did Lemonade see? And did any of those challenges or opportunities create a change, and will that be a long-lasting change in your direction?
I think in a few ways it reinforced some beliefs that we held, but maybe weren't quite certain of in the way we sort of built the business and developed the product and deal with customers. In a couple ways that was visible. One, we acquire customers fully digitally online rather than through a more traditional agent structure. And there are pros and cons of that. The personal interaction with an agent, the deep experience and history that you can bring in a human interaction. All of a sudden, that thing which was a real asset that we didn't have, in some ways became a liability. Because you now had to acquire customers in a way where you couldn't use the methods that you've been using for a very long time. And for us, it was business as usual. And in fact, we, kind of going back to my point about agility, when the pandemic hit, and we all remember those 2 or 3 days when all of a sudden we were not in our offices, we basically turned off the machine. We said, we're not gonna invest until we know what's going on in this market and how it can affect us. And this was 2 years ago, and 2 years in our life of our company of 7 years is a very long time. And we were able to pretty quickly understand that it was not only going to be a significant negative for us, but perhaps a positive. And we were able to adjust down and adjust back up and get back on track in terms of our growth plan and our product plan. We conducted what I was told was the first initial public offering org meeting via Zoom in U.S. history, which was kind of fun. For us, it was just like, it's our first thing, and we'll do it. And then we did an IPO, and then we did a secondary offering, and we launched our car insurance product, start to finish, wholly during the pandemic. So things that initially we thought, all right, we're gonna have to put off some of our hopes and dreams while we kind of work through this big change. It actually turned out to be the opposite, and it was really the data capability, the infrastructure that we had built, and the fact that it just didn't need anyone to be anywhere other than have a connection. So it's taught us that some of those things are that we knew were sort of core to our business model were the right path. Now the human element we miss, and we're really striving and excited to get back and kind of bring that piece together, because that is pretty critical, but I think we've balanced it pretty well.
Yeah, it becomes a challenge between losing the human element, the in-person, face-to-face connection, the service aspect that your agents would be providing, versus being able to even market a product or have a product available to them. Not easy decisions. Let's shift gears a little bit and talk about the international perspective. And we're going to start with Lucy. In keeping that international perspective in mind, how should the U.S. insurance community remain engaged with the global market, and to ensure state regulators are on the forefront of innovation and modernization?
Well, I think there's actually multiple ways that this can be accomplished. One of the things that I always encourage my clients and the regulators to do is to really spend time understanding where the smart money is going, what is happening in the startup space. And I think that is particularly interesting to look at not only in the US, but internationally. And it's not so much that every one of these startups is going to be successful. I mean, the odds are, in fact, not. That many of them will fail or never get to size. But what they are telling all of us is that someone believes strongly enough about a new way of doing things. They're making a bet on what is going to be different about the insurance marketplace go forward. And I think in particular, we're seeing some really interesting and innovative startups in China and in Asia in general. And so one of the things I just encourage everyone to do is to continue to be educated on what are the new startups. And it's less about, do we believe in this particular startup, this particular management team, but what assumptions are they making about how the world will be different in the future? And what can that teach us about what we need to anticipate or evolve or plan for in our own markets, in our own organizations? It's always sort of a map towards what could be different, in my view. And so a big piece of that is sort of opening your eyes and spending time being educated on what's happening in those spaces.
Great. And Tim, Lemonade has been heralded as an innovative disruptor in the traditional world of insurance. This may follow on a little bit to your previous answer on the previous question, but how does Lemonade use data and technology services for streamlining insurance products and offerings globally?
So the global, I'll start with the global piece because that is interesting, and we're a global company in the way we think and in where our customer base is, and that's somewhat rare generally in insurance. Large players tend to be European or American or Asian, with some exceptions. We have Lemonade employees in Tel Aviv, in Scottsdale, in New York, and in Amsterdam. We have customers in France and Germany, in the Netherlands, and the US. The bulk of our business is in the US. But when we expanded into Europe, and we're under the Dutch regulatory regime, we were called bold and foolish. And we probably were both. And the reason we can do it is the data aspect and the technology aspect. For us to take a bit of our hard-won capital and say we're now going to plant a flag in Europe is a significant bet and an unnecessary bet for a young company. And the reason we can do that is we initially didn't have to have anybody sitting in Europe to launch Europe. When we launched in Texas, we didn't have anybody sitting in Texas. Now today we're larger and we're expanding. We have many more people around the world to help run the operation and to support customers. But from a digital aspect, the data that we collect and the way that we can interact with customers doesn't require that we're on the ground next to that person to provide amazing service and an incredible customer experience.
Great. Petra, I'm told that Europe has been discussing a legislative proposal on artificial intelligence called the AI Act. Can you briefly explain to us what the AI Act is? And does a risk-based approach follow Europe's AI Act, provide adequate framework for the uptake in artificial intelligence?
Yeah, good question. And indeed, there's an AI Act that was proposed by the Commission, and that means that now the member states and the Parliament are going to look at it, probably come up with some ideas how to change it, and once they both have their idea, they'll need to talk to each other. So I would think that process is only ending next year. But overall, what you see is that, first of all, and this is, I think, important, it's a horizontal act, and that is like the GDPR. It means that it holds for all industries in Europe, not specifically for the financial sector industry. I'll come back to that with the risk-based approach. I think in general there what you see is that the Commission, when dealing with innovation and regulation, they try through a horizontal approach to deal with that. A data act we also have. We have also an act on platformization will come up. So with this AI Act, I think they create three categories. The not allow prohibited AI, so think about scanning faces for law enforcement purposes in public areas. That's a category that is just not allowed, so I think there's a list that's quite clear. Then there is AI that is really easy, where customers really only need to know they're talking to AI and not to a person. But then there's this mid category, and that's where it gets interesting. It's because that's where rules will apply on governance, on data management, on risk management. Even though in the Commission's proposal itself, insurance wasn't mentioned, you now see that in the discussion of the member states, there is the proposal to include underwriting, price setting, and claim settling. So that would be interesting if that really gets in. Why? Well, first of all, because it's a horizontal act, but which also holds for financial industry that is already highly regulated and that has regulated. How will that work together? So I think here risk-based will be very important, and seeing what risks are not yet managed. And again, I would say that much, at least currently, of what is in risk in AI can be covered by the many regulations that we already have, including Solvency II and the Insurance Distribution Directive. So I think that's one. I think second, what we still think is that then you really need to have insurance use cases to really decide that you want to include it, and not just a notion. And I think this notion is important because I do find sometimes that at the political level they only discover today that insurers actually do something with data. And even though they've been doing that for decades. So I think here also education and sharing on what insurers actually do, and that involves data already for many years, is important. But I think with that, it's good to have it because we don't know what's coming, but I think we need to also be considerate of the sectoral legislation that's already there in order indeed to not hinder further developments.
Yeah, it's interesting. It reminded me of a story where I heard that insurers were considering facial recognition to do underwriting for life insurance policies. And, as I look out into our audience, I see quite a few folks that might be uninsurable, but that's all right. So let's talk about consumer protection. And the market has shown, Lucy, that the use of innovation in the insurance often highlights a personal approach for consumer needs. Can you explain how the demand for personal solutions might be improved under innovation?
So, I think this really is about matching products and needs and experiences to an individual, right? And there's tremendous value in making it easier for customers through personalization to really, as I think Lemonade is a great example of, experience the processes in a much more smooth, streamlined way. So the information you've already provided is already available, et cetera, et cetera. There's some, I don't know if personalization is going to be beneficial equally everywhere, right? You think about the various innovations from automobile insurance and the pay as you drive or pay how you drive. Obviously that's going to positively impact from a personalization perspective those that are safer drivers and better risks, and it equally has the negative impact on the opposite set of customers. And so, I think what personalization hopefully does is that it makes clear the connection between one's own needs, behaviors, et cetera, with the likely outcomes. And so ultimately that should drive down risk because it should make that clearer. But in the meantime, I think there'll be sort of, in some ways, winners and losers through the personalization adventure that we're going down. I do think, for just like the processes of experiencing the interaction with insurance companies, it's pretty much only upside for consumers, for that to be a more informed dialogue, because right now it's quite a painful process in many, many respects.
Yeah, it's painful and sometimes not intuitive.
Correct.
And it's difficult. Where I see some of the concern is in the purchasing process. So it's personalized after you've become a customer. Then there's a lot of information that can be shared digitally or otherwise. But I think about if somebody's buying a life insurance policy and they've got 38 pages worth of disclosures, how that fits on a mobile app,
Yeah.
and how the consumer is informed. And maybe the consumer doesn't need all of that information, but it's sort of an interesting conundrum, if you will. Petra, I'm going to come back to you. Innovation can be vulnerable to bias, unfair discrimination, whether intentional or not. What should regulators do to maintain that consumers are assured that the data and the algorithms that are used to make critical decisions are not biased or otherwise untrustworthy?
Yeah. Well, I think that will be key also for the trust in the insurance industry. What we did in Europe was we gathered a group of stakeholders, so again with industry, and they drafted some principles on the use of AI. And the biggest chapter is actually on trustworthy use and ethical use of data, and it involves a lot of use cases, just relaying the expectations we will have on this. It's monitoring and flagging where the issues are. So when it comes to pricing and price optimization, I think on the one hand, let's be efficient, I like efficient, but on the other hand, you need to see if that leads to a sense of exclusions. And what we saw here, we did a survey for our consumer trends report, is that particularly when it comes to household insurances, I think that was over 30%, but also when it comes to car insurances, you see that that at least supervisors see price differences that could indicate price optimization in a way that we may not like. Moreover, many customers actually indicated that after a year they see an increase in price of their policy without their situation really being changed. So I think those are, now monitoring that, gathering that information and then acting upon those right now through principles, but maybe if need be, and I think we could end up in that, also through regulation would be helpful. And there I do think we need to see if we can do that as much as possible at an international level, learning from each other, first of all, but also ensuring that we somehow do it a bit, or well, very much the same way. I think that would be helpful also for industry.
Yeah. It feels like that as a regulator, we have to keep up with innovation within our own departments in order to protect consumers from that type of discrimination.
We do, I think. And in the IIS, I'm chairing the FinTech Forum, which is really fun because it's really a group that is not a policy drafting group. It's a group that is sharing what we see in our market. And we had a good session yesterday. And one of the questions was, how do we keep up? And I think what we came to is that you deal with it. Make sure it's on your desk. Make sure it's somewhere in the portfolio of topics that you need to deal with, because we all need to keep up to speed indeed with what's happening. And the only way to do that is not to think, oh, I should read that too. No, you should have to read it. And the best way to do that is make sure it's in your portfolio for today.
Yeah. So Tim, you mentioned gaps in coverage earlier, and you probably know, maybe you don't know, but I'm from a pretty rural state, Idaho. And in fact, Gary didn't disclose my ancestry .com, but mine came back 100% potato. So, how can the use of technology fill those gaps where sometimes there's not access to the tools needed in our rural parts of our country?
Yeah, it's interesting. I mean, that's a challenge. It's always been a challenge with technology. Trains didn't used to go to every town.
Right.
HBO didn't go to every neighborhood. This is just a thing that happens in history. So broadband has not reached every home in America, and hopefully that day will soon come. But I think we've actually seen the opposite impact in underserved areas where, if you think about a traditional insurance approach, you may have access to the agent in your area. And we bring to anyone who has an internet connection, whether it's fast or slow, we bring all the knowledge of everything that we've learned in 7 years and everything that we've learned from an insurance industry that's 300 years old to that individual. And because of the digital nature of our product, it's not static. It's ever evolving. We change within a very rigorous regulatory framework, we change our product 6 times a day. We make it a little bit better, a little bit easier, a little bit more visually pleasing, a different feature. Now, not everybody feels this in their personal experience, but we're able to evolve that every single day so that in that underserved community, all the benefit of all of that learning and that agile approach comes to that individual. And I would argue that that's a better experience than striving to reach that one agent a couple of towns over. The technology gap will be closed. We're getting closer, but we're not quite there yet.
I mean, this is a place where learning from the international community is really relevant because the infrastructure challenges, the access challenges, the relative privilege challenges can be even more magnified, right, outside of the US. We have many challenges here, and the challenges can be greater elsewhere. But you see what happened with the mobile phone, and just what other insurers and distributors are doing to provide access, information to communities that don't have regular online access. They're not sitting in front of a computer every day. And I think these are lessons that we can bring to the United States to say we don't need all of this other infrastructure in order to solve the problem that we're trying to solve. And so, Thailand, China, I mean, these are places where everything is done via mobile. And so I think, following that example will be quite important.
Yeah, that's encouraging.
Yeah.
So Petra, let's go back to you, and we're going to talk about innovation as an investment. What are EIOPA's long-term goals for enhancing and encouraging innovation in insurance throughout Europe? And are there incentives in place or being discussed for the future for companies that want to adapt and elevate their products offering in the digital age?
Yes, what we did is EIOPA looking at that and also trying to find our role in that. We published end of last year a digital transformation strategy. We highlighted 5 points where we really want to have an impact. And I think first of all is that we really want to, while looking out for the risk and particularly the risks of unfair use and discrimination, but the use of AI, I think that will be very important to have that. We look at how consumers are treated. Indeed, what you're saying about how much information can you share, or could you do that in a layered approach? Sorry. That does require a paperless way of working. And I think we in Europe, we still have some regulations and directives that actually require paper-based work. So I think we need to work on that. We want to do it in a way that it fits into the internal market of Europe, which will be important as well. And I think what we also need to do is educate the supervisors. So we're working on a financial academy where we can educate the supervisors to also deal with innovation. So I think going forward, learning, following, dialogue, focusing right now on AI, but being open, forward-looking on other technologies will help us going forward, while keeping a perspective on how consumers are served, how they can understand that they're being served, assuming that we have to move to digital.
Yeah. Well, it seems like that's the direction we have to go, right?
We get to go.
We get to go. That's a better way of phrasing it. And Tim, I'm going to ask you that's, I think, a little bit of an unfair question. As I read the question, I thought, if I was Tim, I don't know if I'd want to answer this, but I'll ask and you can choose whether you want to answer. So what are the common pitfalls of insurtechs when investing in new ways to reach consumers and grow their business?
The pitfalls for the insurtechs themselves.
Yeah.
Where do we start? It's a pretty long list. I think I will answer it. I'll answer it this way.
Okay.
I've been in the technology space for 20 plus years, working with early stage companies, rapidly growing companies transitioning from being a private company to a public company. So that sort of phase of growth, and so my experience really comes from that as much as it comes from insurance. But I think we anticipated some of these pitfalls effectively and tried to steer around them. One was rather than entering the market with the most impressive, largest, big addressable market product, which one would argue might be home insurance or maybe car insurance, we started with renters. An unloved, kind of side business that lots of folks provided, but when you looked at cable or TV ads 8 or 9 years ago, you never saw the word renters, ever. Today, strangely enough, you will see renters featured often in ads, so it's gone from a sort of unloved to a loved part of the market, and what we were able to do is enter a market a little quietly and a little bit under the radar, even though Lemonade became well known from a brand perspective, and learn and develop and grow and build a book of business and take some hits, both in terms of building the business and learning about consumers, so that as we expanded a homeowner's product or a life product, and then a pet health insurance product, and now most recently the car insurance product, we were starting from that base and that foundation. And with very few exceptions, the insurtechs, for the most part, have started with one product, their primary product, which is let's go to where we want to go. Health insurance, car insurance, homeowners insurance, life insurance. And that's not a bad thing, but what we found is we're now in a position where we have a full portfolio of products, so that when the bumps come and the challenges come and the regulatory challenges come, we're able to pivot and adjust without sort of throwing the company off track. And I think a number of insurtechs have kind of hit those same bumps, and they don't have as much range to adapt.
Sure.
Because they have that one single product. So that's kind of one thing where I feel like we've taken the best from the insurtech world. We're new and data-driven, technology-driven, all those kind of fun things, but also from the more established world of having a portfolio of products for the customer, focused on the consumer and the customer, who they don't want one single product and having one vendor for every different. They don't want 14 insurance vendors. They want one, or maybe two. And so that was kind of 2 or 3 pitfalls that I think we avoided, not entirely, but fairly well.
So the decision to go with renters coverage was a strategic one, obviously after some data or whatever was collected. And the customer experience is good enough that you just want to continue expanding.
Exactly, and we built the back end. We knew where we were going. We're exactly heading to the place that we decided we'd head in 2015.
Right.
Behind the scenes, we were building the platform, the additional products, but the launch, the products that were in consumers' hands, we were quite methodical about how we launched those.
Yeah, very interesting. So Lucy, in your work with legacy insurance companies, how do you best determine the operating model changes that are needed to deliver the company's innovative ambitions? And will those innovative ambitions last for the foreseeable future?
Yeah, you talked about the pitfalls from a startup or an insurtech perspective. There are definitely pitfalls from a legacy insurer perspective. From an operating model question, I want to go back to the word of agility that Tim used earlier. That is really at the heart of what we're trying to solve for. I guess I'd say 2 things. 1, prioritization of limited resources, and then 2, the agility to get it done. And so on the prioritization, this is surprisingly difficult, right? We've got momentum and budgets and things that keep pushing money into the existing ways of working, the existing lines of business, the existing distribution channels. So it often requires a tremendous effort at the top of the house to say, really, what bets do we want to place? Where are we going to de-invest to reinvest? And how are we going to do that? And from an operating model perspective, we're spending a lot of time, I would say, on 2 pieces. One is really thinking the underlying infrastructure from a data and a technology perspective of these companies. You were talking about legacy systems that are not speaking well to one another. The data doesn't flow. That's something that the insurtechs don't have to fight with because they've built a modern modular architecture, and they can be smart about the data that they put in there from the get-go. So that's one big piece. From a day-to-day working perspective, legacy insurers spend a lot of time orchestrating and coordinating usually up and down silos before you can go across. And so a lot of the work is really bringing some of the principles that are commonly seen in the InsurTech world to bear in the large legacy carriers. So this is around bringing cross-functional teams with clear missions, clear KPIs, and really getting management out of the way. And so how do you get leaders to interact with those teams in different ways that truly empower them? Because that's what allows you to move at the pace that is required to innovate. Give the people closest to the data, closest to the customer, the time, the money, the freedom, and the accountability for delivering on that innovation. And those are big shifts in how things happen on a day-to-day basis.
Yeah, they are big shifts. I'm going to move to some of the questions from the audience, and I'm going to start with the top one, and it's up, you all can choose who you would like to respond, or all of you can. Has the rise of InsurTech helped with insurance penetration in underserved markets?
I can start, and we may have different views on this. I'm not sure it yet really has had a meaningful impact on underserved markets. And I think that's in part because a lot of the InsurTechs have brought expertise from outside the industry, from a customer experience perspective, and are innovating on some of the things that are beyond the core underwriting. And to serve underserved markets, generally you need really great risk selection, risk pricing, and I think rightfully so, that's not necessarily where the InsurTechs have started for the most part. Obviously, we've seen a rise in InsurTechs focused on cyber insurance. I'd say that actually has met a market need that has been underserved and is continuing to serve that need. But I think it's only just getting started. Like the game plans, the opportunity for some of these players to address some of those underserved markets is really yet to come, in my opinion.
Petra, have you seen where InsurTechs have improved reaching the underserved markets in Europe?
Well, I think to a certain extent I agree with Lucy. I don't think that's happening at an extent through real new InsurTech companies that you may expect. Still, new technology is creating change. Whereas, and definitely in the time when we were drafting the Solvency II directive, the market in Europe is very much based on group structures with subsidiaries. You see more and more that if you are just in one member state in Europe and you have a license through digital channels, you can sell all over Europe and you get home host structures. You see clients being found through different channels, and I think this different channels also is an improvement. That's not necessarily only through InsurTech. Sometimes it looks very new, but behind it is actually an incumbent. But the face they use towards the customers is different. So I think there's a lot of inspiration, but and I think there is change. But sometimes it's not so much driven by the fintech, and I think that has to do indeed with the size they maybe have, but also even though they're very good with data, it's also the data set that you need to have to actually deal with these risks. So to a much lesser extent, I would say, than I've witnessed, for example, in the payment industry, that is happening. But it is an example of what can be done. So the market is changing for sure.
Sure. Tim, I've got other questions for you, unless you have a thought on this one.
Go.
So let's go to, where did it go? This is a fun one. It's a softball one I can give you. So what challenges has Lemonade experienced with regulators and regulation when trying to enter new markets?
I have no idea what you're talking about.
Good answer. Okay, next.
No, I will answer. I would call it a challenge that we have, not a challenge that we have with regulators. And what we often do, and I think we're getting better at it, is we often bring our sort of internal passion and zeitgeist about the consumer experience and our sort of desire to move quickly to the regulatory conversation. And I remember early when I joined Lemonade, I would go to one of the founders and explain a financial transaction we were considering, and I'd walk through the steps, and I'd say it typically takes, you know, X weeks to Y weeks, and here's who's going to do what, and the question I got back was, excellent. How do we do it in half of X weeks? And I was like, well, no one's ever done that before. This is how long it takes. And of course, the answer to the story is, of course, we did it in a half X weeks. And so we tended to take that approach sometimes a little bit too often to the regulatory conversation. And I think it can be a challenge for regulators to do their job effectively and kind of throw the schedule up in the air. It's a really tough thing to do, and I think we kind of adapted our methodology. I'd love to see, like, I have a dream that someday a regulatory authority might have the, you know, they have the express lane at the grocery store, the 6 items or less. Right. Then you got the regular lane. Like that express lane might be a thing that could be helpful. Or interesting, and you know, it sounds a little glib, but there are lots of things we need that are pretty straightforward. They're important but straightforward, and there are other things that we and other insurance companies need that are complex and require the traditional length of time to do it right. So if we can nudge that, you know, approach a little bit, then we're doing our job.
That's an interesting idea. So I'll ask Lucy and Petra this one. There's so much going on in this space. How should supervisors share information with one another relating to global developments in the innovation in insurance?
Do you want to go first?
Well, I think, first of all, what I said is I think the FinTech Forum is a very good forum to share information. You have to prioritize, so we've prioritized in the last 2 years on machine learning, AI and blockchain. And I think the first thing that you hear is that there's different speeds of developments in the world, which is great because that's where we can learn from each other. So I think that's the first. Second, it's almost always on the agenda of regulatory dialogues. But moreover, I think it's conferences like this, and it's also listening to industry in different parts of the world, like you say. Keep up also with the parts where you may be not drawn to automatically, but still, if there's a startup, also cross-sectoral in other parts of the financial industry, maybe not in insurance, but part of the logic that is in the new tech companies will also be in the new tech insurance companies. And I think that in itself will be very informative for our work going forward.
Yeah. I mean, this is about anything else. It's about dialogue and making sure that you're focusing on the most critical issues. I think one of I always find learning through stories is kind of the best way. So, examples of, challenges. I think always sharing sort of challenges when you're in these scenarios, not just talking theoretically about frameworks and concepts, but really where have things gotten sticky? I always find that to be a particularly compelling way to share that information. So maybe it's a particular case study or example. I'd encourage the forums to spend more time on where have things gotten stuck and what can we learn from that to avoid it going forward?
Yeah. So here's a question that asks, what lessons do you see from an emerging markets in terms of technology and other jurisdictions that they could borrow?
Well, maybe if I may, I think if I look what is happening in Asia, it's the fact that, and this is where we as regulators also really need to act upon, it's that the way we look at insurance and pensions and banks, from a tech perspective, they have a great idea. They want to bring it to the market. They're going to use technology and data, and they're not really busy in where it fits. And maybe it's the first product comes out, there may be another product that actually is very compatible with the group of clients they already have. And it might well be that it's a different industry, financial sector from our perspective, but for them it's still the same business. And what you see is that then involves also questions about competition, about regulation, prudential conduct, but also data privacy. And so what I find is that I'm talking more to other regulators and how we can paperwork together, but it's the privacy or the data authorities in Europe, because to keep up with their mindset, we also need to, I think, interact in our world and not look at it from our own sectoral perspective that we have. And so that for me is a key lesson, looking at what's happening in the market and taking that back to what we have to do.
That's a really great point.
Yeah. So let me ask the next question. Many insurtech startups have exceeded premium projections and also exceeded projected loss ratios. How is this sustainable, and how will this change? I don't know, Tim, if you want to.
Maybe I should take that one. This is true. Loss ratios have been higher from time to time for Lemonade, although I note that we're not alone.
Sure.
In this quarter or in the year ago quarter, I think it's an issue that troubles big swaths of the industry, depending on what's going on, whether it's inflation or the Texas freeze or unpredictable events. It's not sustainable, but it's expected. Mm-hmm. And there's a reason why there aren't 60 or 70 Lemonades in the world, is because it's really hard to build a company, to satisfy regulation, and to kind of get over the hill of early customers. Early customers are great, except they're not. The first-year customer is the worst customer in terms of loss ratio, in terms of churn rate, in terms of all the things that create challenges for a business. And when you're growing at a certain pace, every year you got a whole lot of first-year customers. Now, what we can see internally is a cohort analysis that says, all right, this group of customers we acquired a year ago looks very different than the group of customers we acquired 3 months later and 6 months later and 9 months later. And so we can see internally this progress and this improvement. But we recognize that we're not where we need to be. It helps, it encourages us that we don't need to be perfect. We need to be just as good as everybody else or better. And that's our goal, and that's our plan. And as the book of business grows and as growth rates moderate, we're growing at a slower pace this year than we did 3 years ago. This is just the normal thing that happens as you get to a certain size. You start to see that evolution of the loss ratio and the expense ratio, and we've raised enough capital to get us through years of this development, and so we're well on our way.
But also in steady state, your economic structure is going to look different than a traditional insurer, and so you may have more room in some respects for higher loss ratios in steady state.
That's right.
Than your competitors, because the operating expenses look completely different. And so I do think we have to think about this in the context of the entire business and the combined ratio, and rather than just one piece of the equation. Obviously, you can't sustain unplanned for loss ratios forever, but it may not look exactly the same as the competitive set.
So I'm wondering as well, just to follow up on that, on your thought a little bit and the answer. When Lemonade started, you were very attractive to sort of generational younger citizens who may be a little more aggressive in their driving and have other issues. Do you think that has contributed towards that increased loss ratios? And is your model changing to where you're trying to balance out who's attracted to Lemonade?
It's an interesting question, and I think while there are certainly in our customer base, either whether it's more aggressive drivers or more risk-prone individuals who might drive a loss ratio up, the underlying reality of what we're able to do with the way we acquire customers is we're collecting something like 1,800 data points about every customer as they become a Lemonade customer. And that compares to something like 20 or 40 data points that you would typically get in sort of an agent-based interaction. And so individuals that in a traditional model would look very similar if they were the same age and in the same zip code, they would probably be priced quite similarly. With the Lemonade, and not just Lemonade, but a digital customer acquisition structure where you have 1,800 data points, those two individuals look radically different even if they're the same age, and even if they're in the same zip code, and even if they have the same claims history, because we just have much deeper information about them. In fact, we found that the difference between those individuals could be as much as 800%, 8 times.
Wow.
Because of every piece of information you have about those folks tells you a little bit of something. You don't necessarily know why, but you don't need to know why. You just know that they might have a little more risk or a little less risk. And so that, I think, enables us to, as we grow and as the customer base gets larger and the data set gets richer, we're able to say, avoid what you're suggesting, which is, younger folks or more aggressive drivers or greater risk.
So I think we asked this a little bit earlier, and we've got about 4 minutes left. How has the pandemic affected? We'll start with Lemonade, but I think the rest of you may want to contribute. How has the pandemic affected your workforce and your ability to attract and retain, important employees? Very
double-edged sword. Very glass half full, glass half empty, I guess is the right metaphor. We've really opened our eyes to enabling remote work or hiring people that aren't in one of our hubs. We were very laser focused on company culture and very office centric. So Tel Aviv, New York, Amsterdam, Scottsdale, those were the offices, that's where the people were, and it worked really well. The pandemic forced us to really question that, and today we will, if we find somebody who really fits the culture and fits the role, and they're in Atlanta or they're in Dallas or they're wherever, we're open to those people, and that's been good for us and good. We still have this very hub focused workforce, but it's been good to adapt in that way. On the flip side, it's been much easier for people to leave. Yeah. Because if you're not having lunch with someone, if you're not sitting across the desk from me a couple times a week, it's much easier to get that call or get that offer and make a transition because you're not as mentally connected, I think, to the company. And so we've seen a lot of both. Mentally and emotionally connected.
Yeah. Lucy, from your perspective.
Yeah, I mean, the pandemic has really shone a light on the importance of digitally capable talent in the insurance sector. And I think a lot of maybe I'll just take the legacy point of view as in some ways a point of contrast. For the legacy carriers, the recognition that they massively need to upskill the talent that they have. And so we're spending a lot of time helping them think about how do you accelerate the learning and development of the capabilities that are required to be successful go forward based on all these digital trends that we're seeing. Insurers, like all other companies, are struggling with this question of remote work, hybrid work, carrots and sticks we were talking about earlier about getting people back into the office. But I think what it's really highlighted is the need for a different set of skills and capabilities. And so figuring out how do you create the learning environment, the recruiting environment to actually attract those into the insurance industry, which doesn't necessarily have if you're listing industries, it wouldn't be the first one that people would go to for tech and innovation. And so it's been a real challenge to try to work through and a big focus of figuring out, how do we attract and build and retain that talent, given everything that's changing around us.
Yeah, very insightful. Petra, how about you?
Yes.
What's it been like in Europe?
Yeah, what's been like here? I think first of all, and I think it was said before, I think industry did really well, moving back home, serving clients remotely, and I think and coping also well with the crisis. So that's the first. That's also for a regulator also is dealing with working from home. That's helpful if industry is not getting into trouble. So I think that went really well. As a European community, we saw many move home, meaning to their own country again. So we were all over Europe. I think that and still to a certain extent we are. So again, the chance of bringing people back, but also recognizing some needs of being home, I think is important. But overall, I think it also showed that we are capable of doing that and liaising also with the national supervisor in each country. I think what it really did as well is that we I think became more appreciative of the fact that people, when they were in a call, someone would walk by, particularly when we were still homeschooling. I was working while 3 kids were, I hope they were studying, but at least they were in the house somewhere with a computer, and youth and computers, it's a risk, they do something else. But I think I think from that perspective, and I truly hope we keep that in whatever business we are. I think it also shows there is some flexibility possible, and when still delivering very good work while combining career with care. And I think that is a lesson learned from COVID in general that I hope we can keep.
Yeah, I hope so too. Well, listen, Petra, Tim, Lucy, thank you for sharing this time with us. Can we give them a round of applause?